All right, let's dive into a really powerful tool that's all about giving traders a clearer and, most importantly, a faster look at the market. We're talking about the Triple Exponential Moving Average, but you'll usually just hear it called TEMA.
So let's start with something I think we've all felt. Have you ever been staring at a price chart? You see this huge move, but by the time your indicators actually catch up and confirm it, the party's already over? It feels like you're constantly reading yesterday's news, right?
Well, that feeling has a name. It's called the trader's lag problem, and it's one of the biggest headaches in technical analysis. It's also the exact problem that TEMA was designed to fix.
So what is indicator lag, really? Well, it's exactly what it sounds like. It's that frustrating delay, the gap between the price making a move and your indicator finally shouting, "Hey, something's happening." And in trading, that tiny delay can be the difference between a great entry and a missed opportunity.
I love this analogy. Think about a traditional moving average like you're trying to steer a massive cargo ship. It's steady, for sure, but man, does it turn slowly. You crank the wheel and then you wait and wait. TEMA, on the other hand, that's your speedboat. It's nimble, it's quick, and it responds almost instantly.
So, how do we get behind the wheel of that speedboat? How do we get that kind of responsiveness? Well, that's where TEMA comes into the picture. So here it is, the Triple Exponential Moving Average. It's basically a souped-up version of a regular moving average. It's built from the ground up to smooth out the noise in prices while slashing the lag you get with older, slower indicators.
Now, TEMA isn't some brand new invention. It's been around since 1994, when Patrick Mulloy introduced it. And his goal was crystal clear. He wanted to build a better mousetrap, a moving average that was just plain faster than anything else out there. And he did it with a really clever formula designed to mathematically cancel out some of that lag.
Okay, so how does it actually do that? How does TEMA get its speed? Let's pop the hood for a second and see what makes it tick.
The name Triple Exponential sounds a little intimidating, doesn't it? But it's actually just a literal description of how it's made. The whole thing is built by taking an exponential moving average, or an EMA, and then taking an EMA of that, and then doing it one more time.
Now, we're not going to get bogged down in the complex math, but the concept is what's important. You start with a basic EMA of the price. Then, you calculate an EMA of that first EMA. Then, you do it a third time. Finally, you take those three EMAs and mix them together with a special formula that's engineered to subtract the lag.
And that's the key. The whole point of this layered process is that, as Investopedia puts it, the formula itself has an adjustment for the lag. It's specifically built to be more responsive and to hug the price action more closely.
Okay, so that's the theory, but what does this actually look like on a chart? How do you go from this clever math to actually making trading decisions?
Generally, traders use TEMA for two main jobs. The first is to quickly figure out the direction of the trend, and the second is to spot potential areas where the price might bounce or reverse.
So let's talk about the first one, which is also the most popular use, simply identifying the trend. Because TEMA is so fast, it can give you a much earlier heads up that a trend might be starting or ending.
And the beauty of it is its simplicity. You really just have to glance at your chart and ask yourself one very, very simple question.
Yep, it's pretty much that direct. If that TEMA line is pointing up, it suggests an uptrend. If it's pointing down, it suggests a downtrend. It gives you a really clean visual cue about what the price is doing right now.
Okay, the second cool way to use TEMA is as a kind of moving support or resistance level. So in a really strong uptrend, for example, you'll often see the price come back down, touch the TEMA line, and then almost bounce off it before heading higher. It acts like a dynamic floor under the price.
But, and this is a huge but, you can't just assume this will work every time. You have to be a detective. Look back on that same chart. Has the TEMA line acted as a good bounce point in the past? If not, there's no reason to think it will suddenly start now. Context is king.
So let's bring this all home. What's the main takeaway here? If you remember just 3 things about TEMA, it should be these: speed, responsiveness, and context.
This chart really nails it. Traditional moving averages, they're slow, they're steady, and they're great for confirming long, stable trends. TEMA, it sacrifices a little bit of that smoothness for pure speed, and that makes it incredibly useful in more volatile markets, where getting an earlier signal can make a huge difference.
And of course, no single indicator tells the whole story. Smart analysts know that TEMA is a team player. You get the best results when you combine it with other tools, maybe something like the MACD, to measure momentum. That way, you get confirmation and a much fuller picture of the market.
So that leaves us with one final thought. TEMA is an awesome tool for cutting through the noise and reducing that frustrating lag, helping you see what's happening now instead of what happened 10 minutes ago. But at the end of the day, it's one tool in your toolbox. The real art is figuring out how you'll combine it with others to write the next part of the market's story.